Hello, friends. In this short video, I would like to talk about money and investments. Uh, Investment is a game of luck and skill, but my way of investment is pluck. That means the ability to make decisions and so that you can make money and you can create wealth. And Currently, markets are very down. Crypto is down, metal prices are down, and so overall the market is not encouraging, and people are worried what to do it, and some people they are trying to sell off. But my view is that you must stay invested, and if you have money, you can still invest money. You must stay invested so that you can make returns. uh, Usually, people lose money uh, uh, in the bear market, but my perspective is that you need to put more money so that you can get returns, and you should be willing to take risk, and you should be very patient. You should have a very long horizon. So there is a panic everywhere because markets are not encouraging. So these are all the observations. And another thing is that when you want to make money, you should have a very long vision, and you should have a strategy. And investment is about probability, and it's about psychology, and strategy, and taking a risk, and taking calculated risks. Only then you will be able to make money in the stock market. There are people they are investing going for IPOs, but personally I don't encourage IPOs. Best thing is to directly invest into the stock market, and you can invest into right companies so that you can make money. Secondly, if you are working from 9 to 5, best thing is to go for SIP, or best thing is to go for SIPs, and invest on good companies and stay invested. On the other hand, if you are having money, and if you have resources, and if you are a very big taker, so you can hire a team, and you can bet, and you can be on the long game, and so that you can make money. But everything depends on risk, and not to take a risk is also a risk. So you must take a calculated risk, and you should bet on should have guts, and so that you will be able to create wealth. And as I said, we should have a very long horizon. And then again, when we talk about investments, gold is down, metals are down, and markets are not encouraging. So what you have to do is to stay invested, and stay diversified, and you should wait for results. And investing is a boring job. That means don't over trade. Some people they keep trade for the sake of trading, so it involves in transaction costs and losing money. So best thing is to stay invested so that you can get money. You can invest into index funds, you can invest in Nifty 500, so that you can get money. Apart from these things, you can go for small cap, mid cap, and large cap. In large cap, usually you can get around 12% CAGR, and in the mid cap you can get more, and in small caps you can get more than what you get. So again, you need to have some calculations. You should have some vision, and you must take risk. And mm, there is no fixed formula as such in investments. There are people, they invest into micro cap investing. That means tiny stocks they invest. Still they make money because these people are very smart. They go by the road less traveled, and they research a lot, and talk to the stakeholders, shareholders, and get the information, research a lot. And if they take around 10 companies, out of 10, even if 8 are not doing good, if 2 companies are giving best returns like 50x or 100x, then it will overtake the losses which they lose from other rest of the companies. So you should have the risk appetite, you should have a research, and you should be you should be willing to wait for the returns, and you should have connections, so that you will be able to make money. So whether you are into large cap or mid cap, small cap or micro cap investing, you have to wait for the results, and you should stay diversified. And there are different, now people are going for ETF, exchange traded funds. So exchange traded funds means they are calculated at that particular point of time, unlike mutual funds. What happens, they are calculated based on the NAV at the end of the working hours. But whereas the ETF means it is calculated at that particular point of time, the transactions costs are lower. So, and the ETF funds are catching up. Then again, when we look at this mutual funds, you can go for lump sum. Uh, People go for SIP. They can average the cost. There are people, if they have money, they can go for lump sum. So when they go for lump sum, they get more returns than what they get from SIPs. Then again, you can't time the market. Then again, in this lump sum also, if you invest in lump sum in staggered manner, the returns are far better than what you get in single stroke lump sum investment. So this is the strategy, you can follow it. So all that you need to use to have in your mind is that to create a wealth and to achieve the financial independence. So these are all my perspectives and ideas related to money and investments. And overall, what I would like to share is that avoid going for FD, because FD gives maybe around 7% or 8%. As senior citizens, they get, I think, 0.5% more. So avoid FD. Instead, go for mutual funds, and through a right approach and calculation, then you can get a 12% rate of returns. And you can beat inflation. Inflation is around 6 to 7%. So the best thing is you can get more returns from stock market or equities. The next option is that real estate. Then third option is gold. Least option is FD. So it all depends upon your risk appetite and risk profile. So all these things you have to take into account before making your financial decisions. So let me share with you my challenge that I had a brain stroke in the year 2021. I survived because of my positive psychology. Thank you for empathizing with me. So I request you to consider subscribing and sharing with your networks. With gratitude.